Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, November 15th. Hope you guys are having a great day today so far. Hey, we got a lot of data to go over, so we'll just jump right into it. We'll start off with the retail sales for the month of October. So September numbers got revised higher. So I believe, if I recall correctly, it was at 0.6, and they jumped up to 1.0 here. So that's obviously great news here. Forecast was supposed to be at 0.7%, and went up 0.8%. So retail sales is looking very good for the month of October, and even September, with the improvement. Now, if you strip out the big ticket items like auto, we got the core here, and we got, again, September was 0.7%. 0.5% was the forecast for October, and went up to 0.8%. So good numbers for the months of September as well as October for retail sales. We're seeing some improvement. This is obviously important because if people are out spending money, that means this is going to help boost the economy even further, and obviously hopefully create more jobs as well. Now, we also got the Empire State Index numbers today, and this is the manufacturing numbers out of the New York region. So back in October, we had a contraction that regressed back down to 6.8 on the index level, and then the month of November, it went up to 1.5%. So we're back in the expansion territory, but barely out of it, but obviously much better than contraction here. Now, we got a couple data here, import price index and business inventories that are not as important, but they're good to look at here. So September for the import price index was 0.2%. In the month of October, we had a 0.5% increase. So obviously our prices to the consumer here, so that's something that helps kind of bring in inflationary numbers. It kind of gives us a preview of what inflation might look at. Business inventories, back in August we had a 0.2%, and September it pulled back a little bit, only up about 0.1%. So business inventories we want to kind of look at because we want to see if businesses are stocking up. That means potentially they could be hiring more people, and this is pretty, these are pretty low numbers here, so nothing really out of the ordinary. Today's stock market's a little mixed. On the flip side, the Dow, which has been up quite a bit, actually is the only one that's in negative, where NASDAQ and the S&P are actually up. So kind of the flip side, probably kind of running out of steam. Basically what the traders are doing today are kind of repositioning themselves, kind of reanalyzing. We've kind of gotten in such a flurry since the election that the stock market kept going up, bond market was tanking, treasury yields were going up. So now they're kind of repositioning to see are they in alignment or should we go? There's been a lot of concern for when Trump takes office that maybe what he had in his agenda, his campaign premise was that maybe it could create inflation, and so they're kind of repositioning themselves into those areas. But once we get into it, it's going to probably take at least a good year before we start seeing those results. If we even get into those areas, he's got to go through Congress and everything else, and some of that stuff may or may not work. So we'll have to kind of wait and see. Right now, it's just kind of an early reaction to the possibility and more emotion based here. So here's the bond market. As you see, we did tank quite a bit here, from here down to here. We did worsen yesterday. We closed 94 basis points down, so that basically translates to 1 point, a loss. So that no point loan at let's say 4% is now 1 point. So that's kind of the loss we're at. Now today we're up about 28 basis points from where we left off yesterday. So we take from here, and now we're up to here. What I like about this is, everyone here, we kept going down, down, down. Now we're actually starting higher. So we don't know if we yet hit the bottom yet, but at least it gives us potential to give us a little bit of reprieve and a little bit of a breathing room. With that big of sharp of a drop, it seems like to me it would be more of a oversold position, the bond market, and you might see some people coming in at some point, but now they're trying to reposition themselves as to what's going on, especially when the Fed is talking about raising rates in December, which is going to hopefully get us ahead of any possibility of high inflation ahead there. So those are all things they have to kind of consider as well. So folks, if you guys want to receive updates throughout the day, just go ahead and go to Twitter. You can follow me here at Mike Bjork, and you'll see updates throughout the day of the different market news that are popping up throughout the day. All right, folks, you guys have a wonderful day. Thanks so much for stopping by and watching, and we'll see you guys tomorrow. Bye-bye.